Well, once again in overnight trading, small cap stocks featured. Last night, the Nasdaq, the S&P 500, the Dow all finished the session largely flat, but the Russell 2000 put on another 0.75%. Now, this support for small caps traditionally comes at the end of a bull market. Investors are reluctant to buy into the market leaders, usually because of valuation concerns. And so instead of buying into the market leaders, they spread their investments across the market, and small caps are normally the beneficiary. Whether or not this is a signal of the end of the bull market or that we're getting closer to it, only time will tell. But it's a very interesting development in markets, and we'll speak more about that in a moment. We did see jobless claims. They slid to a 3-year low in the US. That would generally be a positive from an economic point of view, but of course doesn't support the rate cut narrative that's been so important in driving US shares higher. So some reasons for investor caution based on the macro data. Locally in Australia, we saw huge support for copper exposed resources yesterday. Capstone, Sandfire, Rio and BHP all up very strongly, 3 to 8% in trading yesterday. And it seemed to come at the cost of lithium and rare earth stocks. So within commodity stocks, within resources, there's a very specific focus at the moment as to who goes where. We've also tonight got the US PCE coming out. Now, this is a component of the national accounts. It's one of the key inputs to calculating gross domestic product, or GDP. And the PCE is also known as the deflator. Now, in the past, this has been one of the Fed's favoured measures of inflation, and it's expected to come in flat at 2.9% on an annualized basis. Now, this could be very influential in the market. If it comes in softer than 2.9%, we could see strong buying in shares as investors take greater confidence in a rate cut next week and potentially further rate cuts in the US. However, if it comes in stronger, it could work against the market narrative of rate cuts. And if it does, we could see selling. So anything over 2.9% on the annualized PCE tonight could be very influential in trading, at least in the short term. This morning, we've heard about a deal that OpenAI have struck with NextDC for a new data center in the west of Sydney. Now, this is a very important development. We've seen a boom in data centers, and as we saw with the release of government policy this week, it's critical to Australia's productivity growth and to the growth of private investment. In fact, in the GDP data that we saw, the pickup in private investment was almost solely due to new data centers. And so this is very crucial, not just for the companies involved, but for the Australian economy. Now, OpenAI will be the lead tenant in this new data center at Eastern Creek. It's a $7 billion build, very expensive in terms of what's required to get this up and running. But with a guaranteed tenant, it's very likely investors will queue up to get involved in this if it should come to it. Australia is identified as a regional hotspot for data centers. It's among the top 5 for data centers in the world. Over the period 2024 to 2030, it's forecast that 26 billion will be spent on data centers in Australia alone. Now, this is an interesting number because it would also mean if that build comes to fruition, the data centers will be taking up about 12% of Australia's energy. In other words, they're going to suck a lot of electricity. And given the situation and the mess in energy policy in Australia at the moment, that is going to put increased pressure for the government to shift away from its current renewables only strategy. And so turning to our watch list, naturally enough, top of the list today is NextDC, likely to be a big beneficiary of this announcement this morning from the Chief Strategy Officer at OpenAI. We could see a spike in NextDC share price this morning if investors respond in a positive way to this announcement. It's the biggest data center operator in Australia. Just while we're on the theme, I thought we might just pull out the list of data center operators. Digico, Megaport, Infratil, which is New Zealand, but also ASX listed. Goodman Group, the developer who are very heavily involved in the data centers build, and the Macquarie Technology Group are all ways to get exposure locally to this theme of data center builds. But NextDC is the biggest of them all. Its stock is down 10% year to date. And given the focus On semiconductors and artificial intelligence, that's a curious development. A number of analysts, including in the Moomoo community, have a strong buy rating on NextDC with a $19 price tag. Now, it has been absolutely slammed from about $18 down to $13 recently. So that price target is suggesting about a 40% upside to yesterday's closing price. Another reason to think that there could be strong support for NextDC shares in trading today. But moving on to Snowflake, the US listed cloud data group, it dropped more than 11% in trading overnight after reporting. Now, the curious thing here is the report was very strong in terms of the third quarter revenue, for example, up 28% to over $1 billion. But they did talk about a slowing of growth in the fourth quarter, back down to 23% growth. I would argue still very strong, but the market didn't like it. And the selling in the stock appeared to be related to that disappointment with the outlook for the fourth quarter. The stock is up 50% year to date, making it vulnerable to sell downs like the one we saw last night. A number of analysts have strong buys on Snowflake, but it is vulnerable to sell downs like last night's action. So certainly a higher volatility, potentially higher risk stock with the potential to also deliver higher rewards. And turning to an example that I think helps us illustrate a couple of key investment themes in the US at the moment, Dollar General, the discount bargain store, was up 14% to a 52-week high. It's up 64% this year. And it illustrates two factors. One, the spreading of investment risk with investors moving out into the market. And two, the fact that right now, and for the last 2 days in particular, they're favouring the old world stocks. The artificial intelligence and semiconductor stocks that have had so much love over the last few months have been neglected. Some of them even fell in overnight trading. And instead, we saw a lot of the more traditional businesses getting support, and Dollar General amongst them. Its sales were up 9.4% year on year. It's got 3 million more customers over the third quarter, and it illustrates that move towards the affordability crisis and the impact that's having on the US economy. It's following a big retail trend here. All the discount chains have been outperforming their much loftier peers, and upmarket retailers' share prices are under pressure while discounted retailers are moving higher.